Okay, I'm live. So hello everyone. I am doing a live. It's been a long time since I've done a live, but I'm doing a live today because I have a phone call with clients and I'm talking to them about their strategy and what they want to do when it comes to refinancing their home, and they also want to purchase. So I was speaking to the husband a few days ago, and the conversation was so good. He said, we need to talk again with the wife so she can understand. And also, I told him, let me record this because it's definitely educational for everybody. And I want to make sure you guys are protecting yourselves, also being careful when you're trying to refinance as well as purchase. So I'm going to make a phone call, and from that phone call, you'll hear our conversation, of course, with their permission. But I just know that this conversation will help a lot of people who may be in their situation trying to do the same thing that they're trying to do. So before I get started, before I call them, thank you guys for joining. I'm Jackie Braden, EVP of Voltage Mortgages. Please follow my Voltage Mortgages page at Voltage Mortgages. And also, I'm not really wearing my jewelry other than my earrings, but go to jawjewelry.myshopify.com and you can check out my jewelry pieces as well. But I'm gonna get started because I don't want this video to be too long. But again, I know it's educational and that's my whole goal. That's why I'm here. I want to do these videos to help the consumer. So without further ado.
Your call has been forwarded.
Oh, they didn't answer. Hold on, let me call him. He's probably trying to call me. Make sure I'm dialing the right number. 0459354. Hello?
Hi there.
Oh yeah, I was just trying to call you. So that's.
And I realized it didn't ring because just a number. I got that.
Oh, okay. Yeah, I was like, it went straight to voicemail. I know I'm dialing the right number.
Yeah, robocall blocker.
Oh, okay.
New number. Yeah, iPhones.
How do you do that? That's a new feature?
It's a new feature. If it's a phone number you never use, never seen, it'll just silence it.
Oh, I love that. I need to put that. Well, no, I can't do that. I get all kinds of phone calls. But you know what also help? If you go to the do not call list, that will also help you. If you put your phone number on the do not call, so a lot of those, well, I guess the robocalls won't stop though. But it has reduced my robocalls when I put my number on the do not call list.
Okay, I'll try that.
Okay, awesome. So thank you so much for letting me record our conversation, just because I know it's going to help people and also prevent them from going to jail, because I don't want people, committing mortgage fraud if they don't have to. But I definitely, is your wife on the line as well?
Yeah, hi, Jack.
Hi, how are you? How you doing today?
I'm good. I have a function I'm trying to get ready for.
Oh yeah, it'd be quick. I figured it'd take about 10 minutes, but so Robert and I were talking when you had left, and we were just strategizing on what you guys wanted to do. So we know we're gonna take your primary home that you guys are living in right now, and you guys are cashing out so that you can purchase. So when we began to have a conversation and I was, asking questions, I was able to kind of get a better understanding of what you guys are trying to do with the money that you're cashing out.
I have a question.
Go ahead.
That's called a refi cash out?
Right. So when you are taking some of your equity out of your home, that's a refinance cash out.
The whole purpose of taking money out is just to go towards a
larger home.
A larger home, down payment for a larger.
Okay, so you want to go to a larger home. Right now you guys are in a beautiful condo, and that makes sense. Of course, you're going to upsize, go to a bigger home, but the only issue is, and this is because I started to ask him questions, I wanted to know, well, what was your time frame for moving, and what were you thinking, Stella?
What? So you didn't get the last one?
Your time frame for moving into the new home.
Okay, so if you ask me, I would say ASAP, or after the month, what's going on. my husband, and I was asking him if he could put that out. The way the market looks, a lot of the homes are overpriced. It's not just that they're overpriced, but people are overpaying. I'm sure you know that.
Yes, they're overpaying by $10,000, $20,000, $30,000. Yeah, the market's been like that for several months now.
Yeah, so we don't want to pay too much for something,
It's not really gonna fit us, because we just want to get in. We want to get the fit.
Okay.
So we can do 3-4 months.
Yeah, we're trying to be flexible.
Okay, so you're trying to do 3 to 4 months after your cash out refinance, correct?
Correct.
Okay. Now, the current home that you're in is considered a primary home. The only way you'll be able to move into your bigger home legally without putting yourself in jeopardy of any type of issues, you would have to turn your current home into an investment property.
Okay.
And the reason for that is when you refinance, you are basically saying, because it's your primary home right now, so you're basically saying, okay, I'm going to refinance my primary home that I'm in right now to cash out so I can purchase another property. But you're trying to purchase a property that you want to live in. Okay, so there's several components to that. If you're going to refinance and turn it into an investment property, you can't live in it because you're turning it into an investment property. So you guys would have to vacate your current primary and maybe stay, in temporary housing until you found your new home, because that will be your primary new home. You can't have 2 primary homes. Okay, and then when you're refinancing, if you don't want to do that because you say, okay, well, that's just an inconvenience, you guys, the best strategy is probably to wait to purchase, because number one, you're in an FHA loan right now. And if you refinance as a primary home to cash out, that will give you the lowest interest rate, but you're basically saying that I'm refinancing, this is my primary home, and I'm also going to occupy the home. I'm going to live in this home that I'm refinancing to cash out the money, right? So if you don't do that, then you're basically not doing exactly what the cash out primary is designed for. And then we see everything, right? So let's say 3-4 months later, you go purchase the home and you're saying that's your primary home because it's a house, and the underwriters are not clueless. If you had just refinanced 3 or 4 months prior, you refinanced it as a primary home, but yet you're now buying a home that you're saying is a primary. Number one, I would have to take you out of the FHA loan right now that you're currently in, because you have to live in an FHA loan for at least 1 year before you could change it into an investment property. And that's what you have to do legally. You have to stay there for 1 year. So anytime you're refinancing to cash out, it's fine. I could refinance you guys right now, take it out of an FHA loan so you can use it for your new home that you're going to purchase. I would have to put you into a conventional home. But one of the challenges that I was seeing based on where I see your property value being, now your property value could be a little higher. Right now you guys are sitting around between 36 to 38% equity, okay? So if we were to do the strategy where you're going to refinance this home, turn it into a cash out so that you can purchase your bigger home and make this one an investment property, your LTV maximum is 75%. So that then reduces the amount of money that you can actually pull out of your current property. You see what I'm saying? Now, if you were to refinance this as your primary home, live in it, you can still refinance it as your primary. You have a higher LTV, and I believe your LTV is at 95% for a primary home, but you have to stay in the property. You have to stay there. Huh?
What's again, sorry?
Say it again?
LTV?
Loan to value. So anytime there's a cash out, if it's your primary home that you're cashing out, your loan to value is 95% because they know that you're still living in the property. Okay, yes, you have this 30% to maybe even 40% of equity that's in your home. We know it's your primary home, so we know you have to have somewhere to live. Not a big deal. That's how the mortgage banks think. That's how the banks think. But if it's an investment property, you're turning it into an investment property, we want some skin in the game. We want some equity already in that investment property. So that's why there's a max loan to value at 75%. Because let's just say you turn it legally into an investment property.
Slow down. She's looking confused.
Okay. So you understand when you're refinancing, you're gonna either refinance this as your primary home, and you can utilize most of your equity that you do have sitting in your home by remaining in your primary home. Or if you were to turn this property into an investment property that you're currently living in, so that you can use the cash out money to purchase a new primary home, you're reduced on how much money you can cash out because there's a maximum loan to value, which is 75%.
So 75% if we stay in the home.
No. 95% loan to value if you remain in your primary home and keep it as a primary.
Okay.
75% if you turn your primary home that you currently have into an investment property, so that you can not have to wait to live in there for the legal time that you have to live in there before you turn into investment property. You understand?
Yeah.
And then here's the thing. Regardless, if you know that you're going to move, and if you guys were wanting to use the FHA loan program to purchase the new house so you can have the lowest down payment and the lowest interest rates, either way, you're going to have to take your condo that you're currently in and take it out of the FHA loan program, put that one into a conventional, so that you can free up. You only get to use the FHA loan program because you have an FHA case number. That case number follows you everywhere you go. So you guys have been in your current home for 4 years. So legally, every 3 years, you can use the FHA loan, where you guys are past the 3-year marker. But in order to use it for the new home, you have to take this current home out of the FHA loan program and put it into a conventional. You guys understand that? Otherwise, you'll have to put a bigger down payment. If you keep it in the FHA loan, you could do a conventional at 5% on the new purchase.
So if we do FHA, we're locked into basically the way they want the loan, which is a conventional.
Say that again?
So if we choose to do FHA, you're saying, well, then there's stipulations there, like it has to be conventional.
So if you're wanting to take your new purchase, right, and you wanted to take advantage of the lowest down payment, which is 3.5% down with the FHA loan, you would have to release the case number on your current condo property, and then they'll take the case number for your new purchase. So yes.
Will we be forced to stay here in the house?
If you decided to cash out and remain in the condo and you still use the FHA loan, you're basically starting it all over again. So if your goal is to use it for the purchase because it's a bigger loan amount, that means, if you don't use it, then of course you can always do a conventional loan that's at 5% down. That's the lowest down payment on a conventional. You don't have to use the FHA if you don't want to, but you will have to live in your current condo for a minimum of 12 months, 12 payments before you can move out of it and legally turn it into an investment property. Because you're refinancing and saying that, okay, this is my primary home, I'm cashing out. So you'll take advantage of cashing out the majority of your equity, but by refinancing, you're literally signing the paperwork saying that this is my primary home. Well, FHA has a guideline where you cannot leave that current home that you basically are still in the FHA loan until a minimum of 1 year.
Okay, So we can cross that one out because we're not going to stay here a whole year.
Okay. So if y'all don't want to stay after refinancing and you're not trying, go ahead.
For a whole year, that's the FHA.
And conventional, yeah, it's 6 months. So you would have to stay for conventional is 6 months. You need to be in there for 6 months before you can, legally leave it, basically. But you're basically, when you're refinancing, and I understand you get better interest rates when you have the property that you're refinancing as a primary. The best situation for you guys is to refinance your condo and just turn it into an investment property if you're trying to quickly purchase your next home.
But it's not really quickly because it's quickly because we want it, but looking at the market, I don't know. Like I said, a lot of the homes are overpriced. It will pay us to bring out to refinance and get some money out because our home will be whatever the comes out for our home market is pretty high, so that gives us a lot of equity.
But quickly, we know we still wait 6 months.
Right. And then that means that that's what I'm saying. So you know that you are going to refinance. Okay, so you want to then, what's your plans for the purchase? Are you wanting to do the FHA again at 3.5% down, or are you trying to do conventional at 5% down?
Probably conventional. We don't want those.
It sounds like conventional is a little bit more, easy, or should I say flexible compared to that FHA.
Right, because FHA have stricter guidelines.
Yeah. So we know now that it's conventional, most likely.
Okay.
5%.
No. So that's when you get ready to purchase. Now, as far as your refinance now, I will still have to take you out of the FHA loan that you guys are currently in.
So that would be unconventional. Refi.
The refinance, yes, I would take you out of a FHA and put you into a conventional loan. And then it could still be a primary because at the end of the day, you are occupying the home, but you do have to be there for a minimum of 6 payments.
And now after 6 payments, are we refinancing again?
No. You already pulled your money. You already did your cash out refi. You have the money. After your 6 payments, then you're just now looking to purchase your home because you followed all the rules and the guidelines concerning the conventional.
Okay, my question is trying to balance out. Because we don't know what the market will be like in 6 months. We're hoping it will drop for us to be able to get something reasonable. But getting money out at this point where the prices are skyrocketing, with the comps, we'll be able to get more cash out. So
right.
How to balance that out? Because that's the tricky part.
Right. Well, that's the thing. So we first have to send the appraiser out there to see what the value is. And then I would definitely triple check. I believe because it's still, you're going to refinance, put into conventional, and it's a primary still because you're going to live there still for the minimum 6 payments or whatever. So the value, the loan to value should still be at 95%. I will triple check and double check that. Let me see. I haven't, I believe it's 95%. I don't think it's 80 or anything like that. And then once we just meet the loan to value, then you are free to hold on to that money for your purchase. And it's actually perfect timing if you're cashing out now and then holding on to purchasing until the market adjusts. Because I know how you guys are trying to not overpay.
Yeah, but we can't cash out now until after 6 months, 6 payments. So that means
no, you're cashing out now on your condo right now, but you're also, paying off whatever bills and preparing yourself for that purchase, and then you'll have the money already for your next purchase. So the 6 months doesn't have anything to do with your purchase right now.
Because we'll need to move out of this one anyway. That's going to give us some time.
So that's
right.
All of that is
the 95% that we pull out, we can can we put that in escrow?
No, you can't. So no one will hold escrow for 6 months while you're waiting to clear, the guideline for you to move out. So you won't be able to go and say find a house in 2 months, 3 months from now and open up escrow, and then they just wait another 3 or 4 months until you're able to, legally move out of your condo. So you'll have to, you can start that process when you're getting closer to that time frame, but you don't want to start that process too soon.
Okay.
Okay, so my other, it looks like what I was thinking. Actually, we do get money now, but we still have to leave here for 6 months.
Right.
Before we get another home.
Correct. Because I'm putting you into a conventional loan.
Sounds good.
And like you said, that's probably gonna just line up with what the idea for you is. Like, take advantage of the equity that you'll have in your home currently, because the prices are so high. And then you're able to pull out more because it's gonna be, over appraised, right? Based on all the properties that are being sold. And then you are, paying off whatever bills, because you use your cash out to purchase another home. You can use your cash out to pay all current bills. So you're even putting yourself in a better position to qualify even more for the bigger home that you're going to purchase, which paying down any other debt will also increase your credit scores, which will give you a lower down payment. And then by taking you out of this current FHA and then putting you into a conventional, and it's still your primary, then when you do get ready to purchase the new home, because it's been over 4 years since you guys used the FHA loan program, you do have the option to still use the FHA program for your purchase, because you've already refinanced out of the condo and you put it into the conventional loan. So I think that's the best strategy. I know at first when when Rob was talking, he was saying, we're going to cash out right now and then we're going to purchase right away. And I'm like, well, you got to be careful with that, because what happens is, and a lot of people are getting in trouble in this COVID market. They're using, it's up to the underwriters to catch it. And that's what I was telling him. We see everything. We can see everything. So meaning like, people they'll go buy, say use the FHA program, which the FHA loan program is for people who plan to occupy the property. So you have to live in there at least for a minimum of 1 year. But people have been using that loan program because it's only 3.5% down, right? So I'm like, I'd rather put 3.5% down than 10, 15, 20. So they'll go buy a property, a couple of months later, go buy another one, and also say that it's the primary by using, say, conventional. But you can't live in two places as a primary at the same time. And then there's a certain amount of miles that they're looking into before you can even say that another home is your primary. Otherwise, we can't stop you from having a second home if you can afford it, but you can't use these programs just to get it at the lowest down payment and then say it's your primary. And I just didn't want you guys to get caught into any type of mortgage trouble.
Yeah, I see how people get in trouble, because that 3% down, boy, that look good.
That's favorable, exactly. And it's fine. You just gotta be patient. If it's a FHA, wait a year. If it's a conventional, wait 6 months. Then go get the next one. But you want to move out. And a lot of people have been using these programs and making those properties Airbnbs and investment properties, but you said you were going to live in that property, and that is considered mortgage fraud. And a lot of people don't realize too, when you're refinancing, it's just not, oh, I'm going to refinance, cash out, say I'm going to live in here even though I'm already planning on moving out in 2 or 3 months, but you just signed your loan paperwork saying that it's your primary. So you have to at least follow the guideline for whether it's conventional or FHA, and then legally move out so that you don't get caught up with mortgage fraud. Because when you go make that purchase on that second home, we can see all the titles that you have. We can see that even on the title report, we can see that that home was just previously refinanced. We can see that you have another property that you just purchased, 2, 3, 4 months ago, right? And so if the loan officer doesn't ask the questions that's needed, and sometimes they don't ask the questions, but I do, because I want to make sure I'm understanding what you're trying to do, and then I also want to make sure that I'm explaining to you the best strategy so you don't get yourself caught up. And then if I know what you're trying to do, then now I'm liable, and I'm not gonna, I wouldn't move forward with knowing that your intentions are to cash out or whatnot, buy this property for down payment of 3.5% down, and turn around and move out quickly so that you could make it an investment property, and then go buy another one with a conventional and then do the same thing over. Like, I wouldn't put myself in that situation, and I wouldn't want you guys to get in that situation.
And Jackie, when we were talking about this the other day, the more I thought about it, it's like, well, as much as we would pay in an Airbnb for that year, that would eat into our equity. So it's really not worth it. Waiting that 1 year, you think you're saving, but on the other hand, you're still spending.
Right.
So that's why I just say, what, it's complicated things, especially when you got a little baby. It's not even worth it.
But I feel like so I think that because you guys are not necessarily rushing, because you know that the prices are already overpriced, the selling of these homes, they're still $20,000, $30,000 over. Being patient to purchase when the market adjusts, maybe in about 6 months, will be the best in your interest anyway, because you guys don't want to pay $20,000 over, $30,000 over. And in the meantime, you can use the money to, like I say, pay your bills down and do all the other plans that you're doing to prepare yourself for the purchase.
Yes, absolutely.
Yeah, but again, you have the underwriters, you have all these people that are supposed to also vet and check for that. And what has been happening in this COVID market is people are getting caught up. They're getting caught. Like, they may not get caught right away, but then when they do get caught, if the underwriter didn't catch it, even some of the underwriters are getting in trouble, because you can clearly see when a person either refinanced or purchased a property, and it's our due diligence to say, hey, you can't use this new home as a primary when you just refinanced 3 months ago and that was your primary home. We have to catch those things, and we want to make sure that you guys aren't, again, putting yourself in a situation, because a lot of people don't know that's mortgage fraud, and it's up to 30 years in jail and a whole $1 million fine. And don't nobody want to be paying $1 million, and all you was trying to do was just get another house. And we understand you're just trying to move to a bigger house, to have a baby on the way. It makes sense. But I just want to make sure you guys understand, you just have to do it the right way so you don't get yourself in any trouble.
Yep, we definitely understand that. And you understand everything? I'm surprised. She got it right way, where it's me. Boy, that was like...
You were like, wait a minute. I'm like, okay, well, there's different ways we could do it. I mean, you can legally turn your current property, because you've been there for 4 years. You've already cleared the 1 year course for FHA. It's just that you guys will have to move out, while you're looking for your new home. And that's what I was saying. You wouldn't have to stay there for a whole year. If you refinance this property, took it out of the FHA and turned it into a investment property, conventional loan, you would be able to then buy your house in 2 or 3 months. The only dilemma is you are reducing the amount of money that you guys are hoping to really get a hold of for the new purchase, because then your loan to value has been lowered to 75% instead of it being a primary, where you can get as most of your equity you can get if you're refinancing it as a primary.
Yeah,
so that's the difference,
That's sticky too. It looks it sounds very lucrative. I guess if it was just me, that might actually work, but there's too many moving parts there. My wife's even shaking her head.
But she's a lawyer, so I knew she would get it. I'm like, I tell you, so I'm like, yeah, she gonna get it, because she's like, no, we gonna follow these rules. We're gonna definitely follow the rules. Yeah, but that's good though. At least you can access most of your equity by still remaining. I'll take you out of the FHA and then put you into the conventional, and then that way when you are ready, after conventional, you got to stay there for 6 months. So when you are ready to purchase, or you never know, you guys might still just want to kind of wait until the market adjusts, and the market will be adjusting. It's coming. It's coming. It is coming. So.
It's coming. It's the inflation is going up, and with the market slowly starting to slow down. In the last couple of weeks, they were saying that it's really stuck.
Right. And so let me just tell you, even right now, like if you guys were to, let's just say if you were going to do, remember how I was saying, okay, you could turn it into an investment property. You can even cash out and make it a cash out investment property. Here's where another layer to the issue and where we are in our market. Right now, the government is literally stopping investors from refinancing for the most part. It's really, really, really hard to price investor cash outs, especially. It's one thing to do like an investor rate and term refinance, where they're just simply trying to reduce their interest rate on their investment property. Even that's right now in this market is very, very hard to price. Meaning like it's very hard to find interest rates to give an investor right now. So if you were to change the property into an investment property, it's just harder. It's harder. And then to cash out, it's almost I would have to take you non-conforming, a non-QM type of loan product just to be able to find an interest rate and make the deal work, because agency right now, the government type of programs is making it harder for investors to refinance and do a rate and term, and refinance and do a cash out. It's been very, very hard to price them. So, and then the government controls all this. They control when it's a buyer market. They control when it's a seller's market. They're controlling. About 6 months ago, at the end of last year, I was able to quote investment property refinances, and I had one that was a rate and term. I was able to quote him at a 2.875. Today, oh my gosh, the interest rates are crazy. It's no money behind the interest rates today. So, and that's the problem. You have to have the margin, has to be there. The money has to be there basically, and it's just not working out for investors right now.
And you were saying to me that that's a political move.
Absolutely.
They passed certain bills.
But that was the previous administration too. The previous administration is what I've heard. I was speaking to one of the guys in my lender, and he was saying it has something to do with the stock market and some type of stock purchase and something going on the stock market, and how the previous administration did this to where they're slowing down on investors when it comes to refinancing, rate and term, and cashing out. Oops. That's weird. Well, my call dropped. So anyways, I just wanted to do a little recording because a lot of people are getting caught up with refinancing, wanting to cash out. But when you refinance and cash out, and then you're saying that this is your primary, you're going to remain in it, and then you turn around and go purchase another home as your primary, that's mortgage fraud. And I don't want people getting caught up, because you can go to jail up to 30 years. You can get $1 million fine, and it's just not worth it. You can wait the 6 months on conventional. You can wait the 1 year on FHA, and don't commit mortgage fraud. So as I was speaking to the husband the other day, that was his plan. He said, okay, we're going to refinance. I want to take as much equity as I can out, and then we want to purchase in about 2 to 3 months. And I'm like, wait a minute, hold up. And then he wanted to, reuse the FHA loan program, which they already have on this primary. And you can't do both. You can't use the FHA on your refinance and then turn around and use FHA again. You won't be able to do that, because you're already currently using the FHA loan program on the home that you just refinanced. Then you have to abide by their other guideline, which says that you have to live in the property at least a minimum of 1 year before you can move out, let alone turn it into an investment property. And then when you do have your primary home and you're cashing out, you do get more access to your equity, but you have to stay in that home. You need to live in it, because you said you're going to occupy it as your primary. And if you're not going to occupy it as your primary and you're going to turn it into an investment property, there is a limit on how much equity you can pull out, because the banks want to make sure there is equity money in that home. So if you say get a new primary, the bigger house. Now I bought my bigger house, I got my condo in this situation, and let's just say something happened. One person lose their job, or if they don't lose their job, something happens where, you get a reduction in your pay, or whatever may happen, because life happens. The first property you're going to get rid of is the investment property, or is the second home. It's not going to be the primary, because we know as the bank, you have to have somewhere to live. So in our eyes, we want to make sure your loan to value is no higher than 75%, knowing that you have a primary somewhere else, because you're going to stay and do whatever you can to pay that mortgage before you pay the second property's mortgage. So that's why it's always a limit on the loan to value when you have investment properties. So I just want to let you guys keep that in mind. I haven't done a live video in a long time, so I'm like, let me just use this phone call for me to do a live again, but also to educate you guys to be careful out there. It's already people getting locked up doing this fraud with the PPP loans. Don't get locked up doing mortgage fraud either, people. Follow the rules, follow the guidelines, be patient. It's a market right now that's a seller's market anyway, because these houses are overpriced by $20,000 and $30,000. So if you have equity in your home, you can grab a hold of your equity. You could use it to pay down your bills right now. You can consolidate. You can do all that. You could even use your equity to purchase another property. But again, if you're going to refinance your current home that you're living in, and you're refinancing it as your primary home, because that's the only place you do have, and that is where you live, do not turn around and move out 2-3 months later after you have cashed out to then go buy another home, because apparently you used the first one as a primary, and you cannot do that within the less time frame that is allowed without getting in trouble. And you don't always hear about people getting arrested or people getting these big fines, and what happened to Sue and Sally when they did it, or if Joe and Bo, if they didn't get caught, so I want to do it. You don't want to do that. Just because they didn't get caught don't mean that they're not on the list to get caught. But they are cracking down, because also in this market, it's been a lot of this type of mortgage fraud going on. So I just want to have a quick conversation. The phone dropped. I tried to call back, so maybe they're in the bad area, but you got the gist of the conversation, and I didn't want it to be too long, even though it went a little long. But thank you guys, whoever came through and whoever tuned in. And let me just scroll through real quick. And I don't know, there's no questions. Oh no, you're so silly. So there's no questions. Just wanted to make sure before I get off. All right. Okay, awesome. So other than that, thank you guys for joining. I'll start these back, but I've been hella busy, which is a good thing. I haven't even been able to post or get on Clubhouse or any of that. So before I go, please follow my Voltage, VOLTAGE, Mortgages, MORTGAGES page. That's my mortgage branch. I've also been busy doing that, building out my mortgage branch, building out my website, getting prepared to do some marketing campaign so that I can scale my business. I'm also looking to hire loan officers. So if you know anyone that's a licensed loan officer, please give them my information. I can hire you. It doesn't even matter what state you're in. You can come on under Voltage Mortgages as a outside loan officer. That means that you're strictly commission. So you need to have hustle. You gotta hustle. You need to be able to get out there and make it work and find the deals. But I am looking to hire licensed loan officers, and soon I'll be looking to hire a processor. But right now I'm just setting everything up, and thank you guys for tuning in. I'm gonna put this on my page so people can go back and view it. Again, it's educational. Y'all have to understand the different rules when it comes to the loan to value and you cashing out, whether it's a primary, whether it's an investment property. They're all loan to value. You can't take all the money out of the property. The bank wants you to have a little bit in there just in case. Okay, thank you guys for tuning in.